Welcome to the global interview series on hydrogen, where we slice through the buzz and we ask what is next for a market that many are claiming is the new oil of the 21st century, which is obviously a huge claim to be making. My name is 𝗟𝗟𝗦𝗡𝗦𝗧. I am the director of the Energy Transition Dialogues at Gulf Intelligence, and I'm very glad to have Cornelius Matthys, the CEO of DII Desert Energy, with me today. Hi, Cornelius.
Hello, Michelle. Thanks for having me again.
Thank you very much for joining. It's brilliant to have you, and I'm looking forward to hearing your answers on some of my questions as well. Let's start off with money. So Natixis estimates that investments in hydrogen will exceed $300 billion by 2030. Sounds like a huge figure, but when you actually look at the numbers needed to be invested, it's not as outrageous as it might seem to start with. Which countries in the MENA region specifically do you see making particular progress in the next 5 years when it comes to building a hydrogen economy? Because PwC strategy says that a green hydrogen market in the Middle East alone, not even MENA, just the Middle East, could be worth $300 billion a year by 2050. Now, that's a very attractive proposition, even for the historical epicenter of fossil fuels. What do you see happening in the next 5 years?
Yeah, well, I think we are living in very exciting times. This decade will truly be the decade of a disruption of the energy sector, which many of us don't grasp as of yet. I think it will be a massive disruption, an accelerated development due to this extremely low cost solar and wind, particularly here in the region, but globally. And indeed, hydrogen opens new possibilities. There have been waves of hydrogen in the past, but this time it is mainly due to the so low renewable energy cost different, and also, for the fact that hydrogen cannot can work where other renewables or electricity cannot help to decarbonize. So definitely hydrogen opens completely new possibilities. Now on the figures, 300 billion is actually not a very big figure. There have been reports out by Goldman Sachs, Bank of America on a $12 trillion opportunity.
That's quite a big difference.
Yeah, exactly. But as by 2050, obviously, only in Europe, we are talking, if you look at the European hydrogen strategy, of somewhere around 450 billion, of which a majority is obviously for renewable generation, and then there's something like 40-45 billion for electrolyzers, of which 6 gigawatts should be deployed by 2024, and another probably 34 gigawatt by 2030. But here in the region, I think there has been a paradigm, a mindset shift over the last 2 years. And particularly recently, Saudi came very prominently on the map, not only with Helios, this major green hydrogen project in NEOM, but also with recent announcements and with the newest record, the 1 cent US cent per kilowatt hour solar project, which is quite exciting, 600 megawatt. So Saudi will for sure become a very big player in a short time. The ambitions are great. The energy minister says, Saudi wants to become the biggest hydrogen exporter globally.
When you have government members, leading government members in the press making such statements, you know that the momentum has truly shifted.
Absolutely. This is the case, and for Saudi, I think there's really big things happening, and particularly over the last few months, we saw the shift, and we are working obviously closely with a number of different stakeholders and different Saudi companies like Aqua Power, NEOM, Al-Jihaz, or Chaos, Capsac, they're our partners. So obviously we get a lot of information also, first and informal information by our partners. And Saudi is definitely a big mover. And when these declarations are there, it will happen for sure. Or even piping Saudi green hydrogen to Europe, which was stated as an option. UAE, where I'm based, is also a potential big mover. So that's definitely be washed out. Oman is typically a little bit slower, but there is a few projects in the pipeline, and
very much trying.
Yeah, definitely. And I'm actually quite surprised that Oman is going completely on the green hydrogen route already. So they are pretty brave. And in terms of, shifting PDO to EDO, the first national oil company in the region to rename as an energy company, similar to what other oil majors did, the private, the commercial ones. So that's a big shift, and for sure Oman will happen. Oman has outstanding wind and solar combined conditions, which is great. Egypt will become an important player. There is big projects in the pipeline, ambitions, and Morocco is already becoming. Morocco could, of course, do faster, but this is a little bit, roughly, let's say, the countries with a few projects in the pipeline that are on the forefront, let's say, for the near to midterm.
I just want to loop back to something just from the first few minutes of our conversation, and we talked about $300 billion US figure. We talked about a $12 trillion US dollar figure, obviously there for different decades, and then a few other numbers as well. And it's something that I've really noticed when looking at the market is that some of these forecasts vary hugely, massive variations. Now, of course, trying to look at forecast for green or blue or grey and trying to stick to that same sort of line, and every forecast has a lot of caveats in it as well, so they're always going to be a generalization to a degree. But do you think that the massive variations that we're seeing in forecasts is an indication of the fact that this market is still so very new, and that some investors still need to build their confidence, and that having better forecasting will really feed into strengthening that?
Absolutely. Well, I think there's different reasons for this massive discrepancy. Reason number one is what amount of green hydrogen we will have over the next decade or next decades. And obviously forecasting for 10 years plus is very difficult. Then the question is on the percentage, on the end demand. With the eye, we made calculations proving that by 2050, 50% in Europe of end demand could be electricity and 50% hydrogen. 50% hydrogen is a pretty ambitious figure. The global estimates go more in the range of 20%. And then the question is also what actually is included in these big estimates. Is it only electrolyzers? Is it renewable generation? Is it applications and other things? So it's, the hydrogen value chain is pretty complex. The question is also which other forms of green molecules. It's not only green hydrogen, it's green ammonia, it's green methanol, it's e-fuels, so like synthetic kerosene, synthetic diesel, these kind of things. So it's pretty complex. And then, you have different time frames. So I think
do you think this complexity is feeding into some investors saying that hydrogen is still a high risk investment market? It's still for those who want to explore a little bit more freely, rather than the traditional energy investors who may still be wanting to focus on the solar and wind sort of projects. Is that fair to say?
It is fair to say, on the stock market, hydrogen is pretty much a bubble. So I think we need to be careful in not hyping hydrogen too much. If you look at valuation on some of the listed companies, that's a little bit crazy, but the stock market tends to always, exaggerate. And there's some phases of a little bit irrational valuations and flows in and out. So they always tend to overshoot and undershoot in terms of valuation, but that's how stock markets are made. The question is now more on projects. So an investor looking to invest in a green hydrogen project or somewhere along the value chain, in storage, in transport, in conversion to other green molecules. So that's a different ballpark. In Europe, projects announced tend to be subject to some sort of support, subsidy, whatever, which is currently being defined.
And it's very controversial in itself.
It is, but green hydrogen, is a new market, and there is clear national strategies. So there is no doubt that green hydrogen will happen. The magnitude and form, of course, is always controversial when we speak about subsidies. But in the first few years, there's no doubt that for creating a market, creating traction, there needs to be some sort of, financing to bridge the gap between green and gray. Here in the region,
would you say that those people who are saying that subsidies should not be part of a green hydrogen market, as well as blue and grey, do you say that they're naive, that they're not looking at the market's push and pull effectively? It just simply won't grow to the scale that we hope without having that level of support? Because it's a point that we hear on the energy transition dialogues, we hear both sides of it, and both sides are very adamant on their stance. I'm more of the view that you do need some subsidies, but they have to be very, very carefully monitored to make sure that they're not an ingrained crutch that will last in the market for the next 10, 15 years. And then we end up with the problem that some countries in the region are having with subsidies, as well as others worldwide. But it is needed to support as a kickstart to really boost the confidence in the market. But do you feel very strongly that subsidies are important?
Well, definitely, Michelle, that's a good point. So we need to deliver to fight climate change by this decade. Everything beyond this decade, to be honest, doesn't really matter much now. So if we lose the opportunity to massively accelerate the energy transition in this decade, then anyway, the climate change cannot be stopped anymore. So we need to move fast and bold. And so in this sense, we want to start a green hydrogen market as fast as possible. And without a doubt, there is still a massive gap, particularly in Europe, between green and gray, which needs to be bridged, And so on different fronts, we need, first of all, a clear framework, regulatory. We need an execution roadmap coming, let's say, as a plan after the bold national strategies, which are great. But now we need to come to execution, and so the framework needs to be clear. The subsidy mechanism in Germany, for example, 𝗟𝗔𝗥𝗚𝗘𝗧𝗏 is formed, which is a foundation which will buy huge amounts of green molecules on behalf of the German government and on-sell to off-takers in Germany.
Potentially 70% of Germany's hydrogen use will be imported.
Yeah, absolutely. And in Europe, in general, 80% of primary energy has always been imported. So Europe will be, and everybody knows this, a significant importer of green molecules and also green electrons, by the way, in the future. Yeah, we need a clear path now. Of course, we need some sort of contracts for difference, to bridge the gap. Direction Germany is going to, but other countries will also. And and we need regulations on mobility. We need, obviously, let's say, a national agenda to create a level playing field in which fossil fuel subsidies are completely phased out, and the level playing field can be created in a way that green electrons and green molecules can become market competitive very fast. And well,
now, are you confident? Are you confident that this can happen? Because we have the leaders in very publicly stating their position. Certain financing packages have been supported towards R&D as well, and developing that. And so there are steps being made, but of course those movements are not the same as pilot projects moving to scalable, profitable, larger projects. And obviously we're talking about the electrolyzers as well, and transport costs need to come down. These are big trouble spots that need to be resolved. We're seeing international partnerships between Saudi and Germany, Saudi and Asia. These are all happening. Are you confident that it's going to take off in time? As you said, anything beyond this decade, we've missed the boat, essentially. Are you confident that the Middle East and North Africa can make enough progress in time?
Well, if we speak about the region here, there has been a massive paradigm shift last year. Last year was the biggest crisis in history for the energy industry. So I think people are not complacent and naive to think that, with an oil price back up to 60, 65 now, things will come back to normal. There is no normal, this massive disruption will take place with or without the Middle East. So I think generally stakeholders have understood this, and what needs to happen now is that countries need to come up with national hydrogen strategies. And I would expect, for example, Saudi Arabia, UAE to come up relatively soon with a national strategy.
I mean, this year, really, do you think this year is realistic?
I think it could be. So hopefully, yes. More and more countries we perceive move very fast, and looking back a year from now, I think many of the developments would never have been expected even by the greatest optimist. So I think this make us quite a bit confident. But of course, our task, also with the MENA Hydrogen Alliance, is to push as much as possible, because it's a huge opportunity. It's a necessity actually for the policymakers to lay the ground here, to be the winners and not the relative losers of this revolution, which will happen in any case.
Just to wrap up, I'd be really keen to hear your thoughts. So we started this with me saying that some people see the hydrogen market as the new oil of the 21st century. And through our discussion, we're talking about how Europe is looking around 50% and more common figures elsewhere around 20% of the market. I'm just keen to know from you, do you agree that hydrogen as a broad market, including grey and blue, obviously little grey as possible, but do you believe that it can be the new oil of the 21st century, or do you think that the energy basket needs to be much more diversified and hydrogen is one part of that?
Well, I think calculations, and you mentioned the 300 billion by PwC here for the region. We're actually coming out with a report also on the localization of the value chain, of the entire hydrogen value chain, and also on the local hydrogen potential in the next week. And we calculated slightly lower figures, but for sure there is a multi-hundred billion potential for green hydrogen. But the question is also how big will be the oil market in 2 decades from now. It will be much smaller, obviously. And there's obviously many more things, many more implications than purely revenues from hydrogen. We're looking at massive job creation potential. We're looking at potentially transforming here the economies to hydrogen economies, which has much higher implications than just export revenues, and actually a much needed diversification. So saying that
sounds somewhere in the middle. That sounds somewhere in the middle between diversified and new oil.
Exactly. So I wouldn't say, so if you look at the revenues of these countries of GCC, for example, today, I think hydrogen will not have the potential to match these revenues very clearly according to our calculations. But there is huge opportunities. There is a multi-hundred billion dollar market potentially, and with all the other ingredients I mentioned, it's huge and probably a once-in-a-lifetime opportunity, but also necessity to move to diversified economies here, with all the jobs needed, stability, socioeconomic development is so important. And for this reason, we believe, there's no time to wait, and countries should really move very fast now.
Indeed, I mean, the region that we're talking about has I think the highest youth growth population that's unemployed, and that is only going to increase as it's also, apart from Africa and some places in Asia, has some of the highest population growth rates as well over the next coming several decades. And of course, we do know that it's also particularly vulnerable to climate change and the risk of climate refugees. So that all very much feeds into that socioeconomic picture that you just detailed. Just before we wrap up, could you share the name of the report that's coming out next week? I'd like to know. I'd like to keep an eye on that.
Yeah, sure. That's about the local potential and the localization of the hydrogen value chain. We're doing this report together with our associate partner, Roland Berger, and there will be a launch event in the near future. It will be a public report, and like TRI has analyzed the localization, the job potential for solar and wind in 2013 already, with the economic impact of desert power. We are building on this tradition, and this is really at the heart of our work to look at the job potential, the socioeconomic effects of the hydrogen economy here, and potential hydrogen valleys similar to Europe.
a critical part of that equation. I will keep an eye out for that with a coffee next week, and I'm sure some of the other listeners will as well. Cornelius, thank you so much for joining us. We really appreciate your time and looking forward to seeing you again soon.
Thank you very much, Michelle. Really enjoyed it.
Bye.
Bye.